Traders, welcome back to another price action trading lesson. We're looking at S&P 500 and futures. The time frame is 2000 tick chart, and we're going to be using price action to help us navigate the structure and identify high probability setups. Right now we can see that we have small uptrend working higher that has a break, and we're bouncing off the range highs. The structure overall resembles a trend range, but if I'm going to zoom back, you can see that there is bullish bias present in this trend range. So much empty room here. Pretty much every single low is higher than the previous one. So I'm definitely not thinking about selling just yet. Let's see what's going to happen. And now we have new high for the central long, pull back, second entry long failure. Can we consider taking this failed second entry long? Not really, because we have the bullish bias and we have this short-term spike in the channel working higher. You can see how many confirmations it has. It also fits off of these highs. So we never truly broke below the EMA here, only now. So I cannot take a failed second entry long just yet, given the overall bullish bias and the possibility of this spike in the channel getting a retest. Okay, and also we are starting to go sideways a little bit, and we are higher than the lower high, so something to keep in mind. And you can see at this point we have EMA exactly on these bars for the most part, 10 bars stacked right next to each other. I have to identify a congestion. This is a no trading zone. If you enter the failed second entry long here, now you definitely have to exit because your edge has dissipated. This is too much of a congestion, no trade zone. I cannot be even thinking about taking a setup in an area like this. We're going sideways, more congestion. You cannot go long, you cannot go short because it can whipsaw you. Now we're breaking higher. This is a good sign. However, we cannot just buy the break out of the congestion because this is a small trend range and most breakouts may fail, at least temporarily. So what we're thinking about is high-low breakout pullback, one break lower, EMA holding, reversal up, because this uptrend may need to get a new high tested, especially since we broke above EMA, and by the way, we have a break and a new low of the downtrend, so there is no longer bearish reason in the market. Now you of course have a high low here, but this is so far from the EMA horrible bar, you cannot take it. New high was created, double top, but basically very close to being a new extreme. It is actually a tempting short setup possibly, but we are very close to news 845. Now the news really weren't that high impactful, so no spike in volatility. I don't think we can be, oh, there is not even a long setup, but I don't think we can take a long. Horrible single bar, uptrend played out, so we just need to be patient. At the same time, I don't think we can take a failed second entry long here. Why? Well, because we want to take a failed second entry long that is part of one move. Now we had brought two legs separate from one another. Downtrend played away to break new low. It's very hard to take failed second entry longs like these, even though you're coming off the range highs. It's better to wait for the proven downtrend, because when the failed second entry long is this broad, a lot of times it can trap you because the first downtrend played out. But as now I can see market trending lower, and I can see the secondary leg is so much larger than the first one. I simply have to right now play the range rules, and I have to expect stronger downtrend working lower. So at first I drew my trend line something like this, and as price action traders we always have to look for these channels. We can see channel on the way up, break new high, channel on the way down. Now we have overshoot, but I can also draw slightly better channel. But even if I draw the tighter channel, it still gets me to same place. Regardless, I have overshoot. You can see 90-degree spike down, far from the EMA, big bearish bars at the bottom of the move. So this is depletion, typical overshoot lately. We've had them a lot, so you understand right now how to recognize overshoot based on pure price action. You can see the leg working lower. If I'm going to zoom out, you can see we're bouncing off the low of the day around the area. Now, and this is tempting setup. This is a little bit more advanced, but if you have overshoot and you can combine it with the key level, it's actually a decent long opportunity if you are in the overall trend range. So I can mark it because the distance from the EMA is so significant. You can almost bet that the prices will pull back at least to the EMA. You're combining the overshoot with the fact that buyers are stepping into the market around the low of the day at the bottom of the trend range. So you're using many price action rules, because if you're going to combine the overshoot, you also expect stronger pullbacks. So let's see what's going to happen. Can redraw my trend line working higher. News came out again. So another news announcement back to back, another overshoot. You can see massive spike up created by the news. I'm going to redraw downtrend working lower, first entry long. There is no second entry long, but had there been, you gotta be careful. You hit overshoot, so it can generate strong pullback down. So I'm gonna extend this downtrend. What's going through your mind? Well, probably retest of this downtrend, and this downtrend completely retraced this uptrend. So you're forgetting about new high of this uptrend because once it was completely retraced, you're focusing mainly on this downtrend working lower. Another tiny overshoot potentially. Let's see what's gonna happen. First entry short, second entry short. You cannot take second entry short. Why? Number one, it is not with the EMA, not even the tail, let alone the body. It is a little bit stacked and it's after possible overshoot, so we gotta be careful. But it is not the EMA after overshoot. We cannot break the rules just yet. So a lot of overshoots right now, we gotta be careful. I'm gonna draw the congestion. Okay. And this is interesting because, as we know, market moves in pairs of twos. One leg up, break, second leg up. And this is interesting pattern. This is failed breakout out of this congestion. Most breakouts will fail and we trade it down into this congestion. So you're actually selling with the direction of the short-term bias. You expect new low. So this is a decent failed breakout. When I was watching this live, it felt like we broke too far up. So I didn't fully trust this. I was looking for a lower high confirmation setup, but the distance is not as substantial. It is a decent setup to consider. I can definitely mark it because we have brought two legs up. I was supposed to trust a little bit more because this downtrend is new low, uptrend played out with the break, new extreme, two-legged pullback, but we pushed quite far up. And when you're watching this live, it is printing fast. I was looking for a lower high confirmation setup of the two-legged pullback, of the full breakout that never formed. We created a new extreme. So you break and then you can see we're following the trend line rule. Now we can't really go long just yet. There's no good setup here, nothing. And right now the bottom of the trend range held again, so buyers are stepping into the market. What I have to do, well, I'm gonna connect these first two swings and I'm gonna draw why the uptrend working higher, because you may go all the way up here. You don't know that. You may go all the way up here playing the range rules. New highs was going through your mind, second entry long, because we broke above EMA. The uptrend has been established and we're going to be following the trend line rule. So you want to take a second entry long at the EMA, and now we have small, only 2 points, second entry long. This is a decent setup. The signal bar is not perfect, but it's good enough to consider because we're at the key entry point, the trend line at the EMA. This is good setup. I didn't get filled on this setup. It actually never truly retraced. It just rocketed higher, created a quick little scalp, break, a new high. Actually, once we broke above EMA here, we can widen it because the break is so tiny. You can see the break is almost not there. So we're going to widen it just a little bit. You can still keep the structure intact. And the fact that we're back above EMA now is telling you that you're going to get new high and you're looking for second entry long. Would also be high low above EMA. Never formed. Market created a break, new extreme. So based on pure price action, we are able to follow the direction bias in this trend range, break new high, reversal, overshoot, stronger pullback, another overshoot, stronger reversal, break new low, break new high. So right now you have to ask yourself, what is the bias? Well, there is no bias because we are stuck in the middle of the main trend range. So, and all trends played out. So this is an area where you have to be careful because you don't have any trend that will help you guide through this trend range. So I just have to be patient. Yes, there is some triple test. I see it, but it's a little bit lower to my liking and you're quite making high lows. Now, uptrend played out and you don't really want to be looking for broader channels in the trend range like this, but it feels just hanging there in the no man's land, not with this resistance. It will work regardless though. Now I'm going to redraw short-term downtrend working lower, so the downtrend is in play. And now we're getting first signs of potential bearish imbalance. The bearish imbalance is not significant, but you can see why this uptrend didn't make it all the way up here, why we are having increased selling pressure at the top part of this trend range. Okay, this triple test, massive leg down, we may have stronger bearish bias because we're not making it all the way up here, which you would expect according to healthy trend range rules. So I'm definitely not thinking about buying because this downtrend is in play. Problem is, I have a second entry short, but I can't really sell second entry short around the support because you're right at the support of the trend range and you gotta be careful. Also, you have to use double bar entry, which is getting quite big. You have to place your stop loss one tick above the initial signal bar because you cannot sell below bull bar. You have to wait for this bar to get a trigger, and it is quite big, so we can't really sell it at the low of the day. I don't really like it. You gotta be careful. And this is significant push down. The first thing I did, I measured the one leg and projected. Okay, we reached the measure move. I'm not gonna draw why the downtrend just yet because we just broke out of the trend range. There's a big chance we're gonna go back in the trend range and we reached the measured move. So at this point, I'm not really too excited to be looking for broader channel. I can start looking for broader channel only if we do this. If we keep trending lower consistently after the measured move was being reached, and we're pulling back so far down from the initial trend range that you have to ask yourself, hold on, the trend range is not even being taken into consideration by the market, because this downtrend took over now. We exceeded the measured move quite a lot, and why are we continuing to go lower after breaking new low of the initial leg? So at this point I'm gonna draw the downtrend. We have slight overshoot, but as we broke the new low and it's not behaving as overshoot, I'm gonna widen it just a little bit. So at this point, you as a price action trader understand that the trend range was pretty much negated, and this downtrend, that's the main pattern. That's your main focus, okay? So what you have to do, redraw the short-term uptrend, wait for this correction to play out, and then wait for a push below EMA and get a failed second entry short, okay? Because as long as this uptrend is in play, and as long as we're above EMA, you can't safely predict how many pushes higher there's going to be, okay? Trendline rule says that 8 or 9 times out of 10 we're going to get the new low, but you don't know if this is going to be the 1 or 2 times out of 10 that is going to reverse and not test it. So you got to be careful. Okay, breaking new high, interesting. Breaking new high. We're still above EMA though, so I can't really sell. I need to see the push below EMA. That's the confirmation that we're reading this correctly. The downtrend is going to get new extreme, because the downtrend is not really that confirmed. Only 2 swings. We don't have third swing confirmation, okay? Sometimes when you have really confirmed channel, you can be selling above EMA here, but we only have 2 swings and no third swing confirmation, so we truly need to wait for a push below EMA to understand that we're reading this correctly. And why we are back above EMA, that's a little bit concerned. Now, I cannot take a second entry long, even though EMA keeps holding, because we have a breaking new high, okay? And I don't really like drawing broader channel like this, because it can trap you thinking bullish, but the main downtrend, that's the main pattern, okay? This is significant trend down, so I'm just waiting my turn to sell. Now we have a failed second entry long as we were looking for, but problem is, it mainly formed above EMA. It just barely closed below. It's getting a little bit sideways. There's no momentum. I don't really like it. We're back above EMA, and now we can see EMA flattening, and unfortunately we are entering some small trend range. Now you have more confusion, because why are we not making the new extreme on the first go? We're going sideways. That doesn't mean that we are abandoning the idea of getting new low. No, we still expect new low. It's just we need to be a little bit more careful, because we are part of a consolidation now. I'm going to redraw short-term downtrend working lower. Okay, there is no setup here. New high, first entry long, second entry long failure. I cannot sell below bullish bar, but I don't really like using double bar entry here, because the context is getting weaker and weaker. The fact that we are so long stuck in this consolidation, that's not a good sign. Okay, so right now I really need to see some clean setup, maybe second entry short breakout pullback. Okay, micro double bottom can reset, so there's only first entry short. Horrible bar anyway, so I can't take it. I'm gonna move the bottom of the string range. So you can see, even though we expect new low according to trendline rule, this trend range is preventing us to find a good setup to go short. We have brought to like a pullback. We're not making it to the resistance, and it's really looking like we may finally test the new extreme, but once again, no good setup here. Yes, you have some lower high, but you know, we're still part of this trend range, not the cleanest setup. You know, the fact that you can't get to the resistance and uptrend played out with the break and a new high again to like a pullback, lower high, and we trade it down. You know, more aggressive trader can consider it is a decent setup. Problem is, when you're watching this live, you're getting quite tired being stuck in this trend range. So if this happened quickly, it is a decent lower high breakout pullback context wise, because you're gonna get the new low to like a pullback, empty room, but a little bit more advanced. And now we created the break and the new extreme. So what I'm gonna do, I'm gonna mark my new low. So right now I'm pausing, looking to go short. Now market continued to trend lower, and I don't really like selling here. First entry short, second entry short, possible double trap, but you have to use double bar entry, and the context is not good, because if I'm going to zoom back, we have one leg down, break, second leg down. So yes, this push to an extreme was significant, but also we reached the measured move, and I'm not really a fan of drawing wider channel just yet because this was a leg down, broad break, second leg down, and it looks too much like a broad to like a pullback rather than consistent downtrend. You can see it has overshoot, another possible overshoot. It just doesn't fit that well. This was a hard area on the chart because your gut feeling is telling you we should reverse because we reached the measured move and the first downtrend played out. But why this push to a new extreme was so significant? So it brings up the question, hold on, this wider downtrend may be valid. So it's important to be objective, and you have to be aware that you have conflicting variables. You're not fully sure. It may be to like a pullback down or the bigger downtrend is the play, but why we're overshooting it, it doesn't really have good fit at the bottom. So be careful, be objective, and don't rush setups. There's going to be always setups. It's better to miss a setup than to take a setup because of you have a fear of missing out, or you're just taking an impulsive setup. You want to jump the gun. Now I cannot take long just yet because this is not proven uptrend. We need to see some strong proven uptrend first. We had significant trend down, so this is just area of development. Pretty much hard to understand what's going to happen. I don't see any good setup. Maybe if this was a second entry short you can consider, but we have some small trend range. This was just for a entry short. You know, there is some lower high here, but it's too far down. You know, we don't have no good trend to confirm it. It's a little bit closer to these lows. Tempting setup, but you know, feels too unclear at this point. Let's see what's gonna happen. And the market is reversing all the way up here. So because we reverse all the way up here, it would negate the wider downtrend. I'm gonna redraw a brand new uptrend, working higher, something like this. We already have a small break and new high, so I gotta be careful. I cannot take a second entry long. It's mainly below EMA. We have a break and new high already. High low didn't trigger, so I'm waiting, being patient here. Can't take failed second entry short. Horrible doji. We have a break and new high. Let's see what's gonna happen. Okay, downtrend working lower. We have a push above EMA, and now we have EMA flattening, and we trade it up. So I'm gonna redraw. Small consolidation. So you can always see after breaking new high, there is area of development, and right now the market cycle entered consolidation. So after consolidation, you can get reversal or trend continuation. And now you have to ask yourself, is this resembling reversal? Not really. We have an uptrend working higher, so I cannot sell. Okay, even though we are part of consolidation, we traded up into this. So there is more of a bullish bias. I cannot sell because this uptrend is in play at the same time. I don't really want to go long into these highs. Uptrend played out, and this is going to be important area because at this point it is starting to look more and more bullish, but at the same time you're still part of the trend range. So let's see what's going to happen. I definitely need to see at least reverse a pattern. Lower high is not enough, especially above EMA. If you have a consolidation, you trade up into. So when I was watching this live, I was thinking, okay, I'm going to draw a channel a bit wider because we may go back into this trend range, but notice what happened. Push above EMA. Okay. And this completely negated any reversal. It looks like a broad two-legged pullback down, and this push above EMA is crucial. This is telling you we're not going back into the trend range. There is no reversal, and after breaking new high, consolidation phase has evolved into uptrend continuation. And I have to ask myself, why after breaking new high we have push up, another push up, another push up? There has to be a reason why we keep working higher. So this is where I was looking for some bigger channel, something like this, trying to find a spike in a channel pattern because it fits really well off with these highs right here, and you can see the channel is being filled from both sides. So I'm thinking about what felt second entry short above EMA, new low, first entry short, pull back, second entry short, and this is perfect setup context wise, but the signal bar is gigantic. Okay, almost 5 points. You don't really want to be entering at this level. It is too far up, so I'm gonna mark it. It is a great setup context wise that you want to study because right now it's confirming the uptrend, but next time we're gonna have smaller bars, so we're gonna be safe entering this. Now you can consider deep limit order, of course. That's also one of the ways how you can cope with the big signal bar, but it's better always to have smaller bars so you have room to scalp out. Okay, and market keeps working higher. So basically right now, another push phase happened, confirming that our channel is valid. So we're looking for second entry long. Okay, micro double top. Count reset. I have to reset the count. Another first entry long. Count reset again. Okay, we're bouncing off the trend line, which is a good sign. Promise you have a downtrend working lower. Now this trade worked. Why this trade worked? Because if you can see, you not only have a main key entry point, but price action also combine it as a fell breakout out of this trend range. But because we have quite significant trend down, I like to see the push above EMA and wait for second entry long. New high, first entry long, second entry long will also be high low. And now we have new high, first entry long, second entry long, high low, confirmation of the fell breakout. We're bouncing off the trend line. You push above EMA. This is really nice. High probability setup. I took this setup myself. Second entry long here. Above EMA. Decent single bar. Correction phase ended. Now, you don't fully have new low for this downtrend, but it's okay. You have the attempt. First entry short, failed, and big pattern always takes precedence over the small one, especially if you're going to combine it with the fell breakout. You're going to have strong push phase up, and market continues to go all the way up here, straight into the close. Great setup. So this is the overall structure for today. Quite a few setups. First part of the day. The second part of the day, also quite a few setups. This was a long area where there were very few setups. We expected this downtrend to get new extreme the whole time. Problem is, it just was too slow and it got too rangy. And eventually this area also was a little bit confusing because we have a break in extreme. It's just a little bit too bearish, but once you retrace too far up, you have to adapt to brand new bullish structure. So I hope you had a good trading day. We'll wrap it up. I'm going to talk to you next time. Good luck your trading.